All right. Welcome. Let me ask you this question. With the upcoming rate cuts, you think the market's going to crash like some of the pundits are saying? Or do you think maybe this time is different? Well, stay tuned because we're going to break it down and we're going to find out. Hi, folks. My name is Jay Scott, aka Crypto Cowboy, coming to you from the great state of Montana. I'm the founder of Freedom Life 3.0, where we help people take control of their financial freedom through education and discussion about alternative assets, because really where the action is at these days, by focusing on crypto and gold and silver and real estate, these alternative assets, they can really give you a leg up in this economic environment. If you know anybody that might be interested in this video, if you go ahead and share it to them, tag it to them, and of course, please subscribe to the channel yourself so you get more videos like this one. All right, so let's get started. All right, so first we're going to go with the disclaimer. Remember, I'm not a financial advisor and nothing I say here is financial advice. All right, so let's dive in. All right, so as you know, interest rates had been kept artificially down for quite a while, down to zero after and during the 2020 pandemic. And governments around the world all did this by injecting billions of dollars into the economies, which eventually caused inflation to soar. And we were up around 9% for a while here in the US. So as you know, the Fed began raising interest rates drastically for about 2 years, in the fastest move up in interest rates of all time in all history. Now, it's debatable if we're in a recession right now, but either way, the Fed is finally ready to pivot. We heard Chairman Powell in Wyoming basically declare that he's ready to cut rates. So probably most likely in September, we're going to see rate cuts. So the question is, will it work this time? Do they have enough bandwidth to make things work? You can see that the markets are really already at an all-time high for the most part. Crypto's way up, Bitcoin's way up, stock market's way up. So with this looming recession, which is still, again, debatable, but maybe coming soon, we know that the unemployment is rising, and that's really why the Fed is going to pivot. The question is, are they going to do half a point or a point? It doesn't really matter because we know that they're coming, and that's going to be a good thing, I think. But a lot of times markets analysts believe that by the time the Fed cuts rates, that's signaling things are pretty bad, and the market sometimes reacts to that. The question is, what will happen this time going forward? All right, so let's take a look at this. As you can see from this chart of the Fed funds rate, you can see that it's gone up and down, and we can see that they've been raising rates now for so long in this area that they now have plenty of room to cut. So I think that that's why the Fed held on so long, is that they needed to be able to use their tools to manipulate interest rates in the economy. So now they've got all of this move that they can bring rates down to stimulate the economy, hopefully stave off super high unemployment. So we're going to see if this happens. And so when the Fed does this, they are basically injecting a lot of liquidity into the market, a lot of cash, basically. And the nice thing about this is assets, the kind of assets that we're interested in, like crypto and stock market, like the NASDAQ, real estate, those all go up. So I think we're in for some good times here. But the question is, what really happens when they cut rates? So what we can see here is you've got the M2 money supply. This is a graph that's showing the M2 money supply. And so you can see that they started, it goes up. It's been going up since 1985, according to this chart. But you can see here, since 2020 now, they've been going down. So the question is, how do they actually drop rates. They don't really just pick a rate and say, okay, we want to be at 5% interest rates or whatever. No, what they do is they inject money into the economy, and they do this by turning on the money printer. You've all heard this term now. It's like the government printing money. So they just turn the money printer on, they inject all this money into the banks, loan it out, and that's how it's called injecting liquidity into the economy or to the money financial system. And so when they do, that's when rates settle down, because now that there's more money out there, banks can loan, they can drop their interest rates to loan money out. So this is how interest rates move up and down, is by the Fed either printing money or tightening things, which we've been on for a while, quantitative tightening, and basically shutting down the funds and not injecting liquidity into the market. That will raise interest rates because there's not enough money to lend. So now that they're going to inject this money, that's going to lower interest rates. And so they have to just gauge this, how much money to inject, so that they know how much the interest rates will go up or down. So it's not exact science, but they've got this figured out pretty well, that if they inject so much money into the system, interest rates will go down. So you're going to go down by half a point or a point. So that's how it really works. So the good news is you hear a lot that when M2 money supply, this is the money supply across the globe, all the federal banks, Federal Reserve banks are doing this in all the countries, that all this new money now is in the system. And not only does that allow interest rates to go lower, banks have more money to lend, people now and corporations have more money to invest. And they will now invest those into assets, and they'll boost asset prices up. So this is why it's so important to be in assets, because this is the perfect time. Hopefully you've been stacking and buying these assets, either high quality tech stocks like Nvidia or Tesla, or those are my two favorites, but there's a few other, of course, Microsoft, Facebook, all of the big tech stocks do pretty well. And especially again, when there's new money supply out there, assets are going to go up. Of course, crypto, think about crypto and Bitcoin specifically, goes up higher than any of them. And this is a track record. You can look back and see, excuse me, Bitcoin is going to go up like crazy now. So Bitcoin has been tracking sideways for quite a while. We know that. And some people are giving up hope, saying, well, I don't know if Bitcoin's ever going to go up again. There's lots of tailwinds that are going to push Bitcoin up. You've got all this money supply coming in, and we've just been waiting for it. And now the floodgates are going to start to open up. So I would say in the next year, we're going to just see Bitcoin go crazy. But all of their assets, real estate's going to go back up. Even though real estate's high, it's going to continue to go up, because now there's going to be more money for more loans. More people are going to want houses. Demand will go up. And so that's all good news. Take a look at here at these asset prices. So, of course, we want to look at Mr. Bitcoin right here. And you can see that's where the action is, right? Look at this. You've got, I want to show you this. So I'm going to draw here. You've got year to date. So you've got 59.6% up. This is Bitcoin this year. Cumulative, I can't even read that number. It's so massive. But on an annualized basis, we're saying that basically Bitcoin goes up 144.9% a year. Can you believe that? People, this is real. This isn't just made up stuff. This is really happening. Look at this. But also, you can see that next you've got the NASDAQ. The NASDAQ year to date, 39.7 and 17.4. Those are the only two that are really going to get you ahead of inflation. And one of the things, I don't know if you really understand this, but between this money debasement, now this is what we say, M2 money supply, liquidity going up is really just money printing. It's great for assets, but for dollars, it's terrible because it debases the dollar. So if you're in a savings account, if you're in bonds, if you're in a money market fund, it doesn't matter, even if you're getting 5% now, you need to be earning around 14%. Because if you've got 10% of, basically 10% money debasement per year. So your dollar loses 10% a year. In 5 years, that's half of your money. If you don't get a raise, or if you don't invest your money in something that's earning over that 10%, but you tack on inflation, you're 13% at minimum. And then if inflation goes up to say 9%, now we're almost at 19% that you're losing. So folks, that's why you have to be in these assets like Bitcoin. That is where the action is at. If you can get 144.9% a year in Bitcoin, doesn't that make sense to be in it? If you're not in Bitcoin now, please get into Bitcoin. It's still going to go up. You're not too late. It's been going up 144% a year. Now, that's average. That's averaged out since it's been around since 2011, right? Does it go up and down? Yeah, let's take a look at some of these years. Look at 2022. Well, look at all assets went down. But Bitcoin down negative 65%. NASDAQ minus 32. They're all down though. This again is when after they had started jacking up rates, tightening liquidity. So you can see that all assets are going down when they tighten. And then you can see here in 2021, Bitcoin is up 66%, NASDAQ 27.4. Then look at 2018, all were down again, right? This is a time where they were contracting again. So M2 money supply is what we need to pay attention to. And these run in 4-year cycles, 4 to 5 year cycles. You're going to see this money supply go up and down, and the interest rates go up and down. And if you're in the right assets, you actually like this, because when it goes down, when M2 money supply constricts, asset prices go down and you buy them cheaply and then wait till the next rise. So you can either sell them at the top then or close to the top and then reload that back into when they drop and do that every 4 years. Or you can just ride it out knowing that, I think this next slide will show, these are asset prices, right? So knowing that the trajectory is like this. Yeah, it goes down and up and down. And we're now about to hit this next trajectory as M2 money supply is injected in there. So I hope this makes sense, everybody. I hope you understand and that I've hit this home is that we've got to be in assets and we've got to be following the M2 money supply, which is really is the Fed reducing rates and doing quantitative tightening, or are they going to are they increasing rates, doing quantitative tightening, or are they going to lower rates, do quantitative easing, print more money and inject it to the system? And again, what I always say is that money printing penalizes savers that are taking their dollars and putting it in the bank, or their dollars and putting it in a CD, because you earn hardly anything and you're losing about 14% a year between inflation and money debasement. So you've got to be making 14% at least. And the only way to do that is in high growth assets that are sometimes called riskier assets. And so this is how we follow what the rich people do. And we keep our assets. Sometimes they never sell their assets. Like Bitcoin, you can never sell your Bitcoin, and you can borrow against it. And remember, when you borrow money, you don't pay taxes on that. If you were to sell some of your Bitcoin or some of your assets to buy something, you're going to pay capital gains taxes. But if you borrow against it and use that money to either fund something and then slowly pay back that loan, you don't pay taxes. So this is what we have to get used to, folks. We have to get used to thinking like the rich people. It doesn't mean that we should begrudge them or that they're too greedy. No, they just know how to play the game. So if you're not in investments, if you're not in assets, you're losing in the game. So hopefully that makes sense. Just a quick video today. Just want to update you guys on the state of Bitcoin, but also the state of why I think Bitcoin is going to rise up through the end of 2025. And really all assets are going to move. We just hope that unemployment doesn't get too crazy now, too high. I think things are going to ease. I think my bet is that this is the soft landing that the Fed's been looking for. I think that they might. Right now, we know people are suffering because of unemployment, but hopefully it doesn't get worse than this and things start to shapen up. And it's going to take a couple of years for things to move where we start hiring again, but or at least a year, in my opinion. But we're getting there. And so this is a critical time. So hopefully you've got some assets for now. You still have time to get in some assets. Again, high tech, growth stocks, crypto, mostly Bitcoin, and real estate, if you can invest in real estate, because that's going to still continue to go up. So hope you enjoyed the show. We'll see you next week. This is Crypto Cowboy signing off.